everyone, and good afternoon, and welcome to everyone listening across the planet. You're back on Radio Toni, and this is the Everyday Business Show. Now, just a reminder for everyone who's listening live across the planet on LinkedIn, Facebook, YouTube, and Twitch, we have Payo ready and waiting to send you answers to your questions and links about anything that we talk about on the show today. And a reminder, if you're watching from YouTube, please like and subscribe the channel. We really appreciate your subscription to the channel, and we love to have you there. You'll see weekly interviews across a range of topics from amazing guests, and we have another one today. A reminder too that if you miss any of the live shows, you can catch them up on Binge TV Networks USA and Hero Go TV across the USA, and on the Toni TV channel app on all Roku, LG and Samsung smart TVs across the planet. Now, today's guest is Tusha Kansel, and we're incredibly privileged to have him on the show today, and we're going to be talking about capital and venture capital and what venture capital investors are looking for. But before we talk to Tusha, I want to tell you about his credentials. Tusha is an accomplished professional with experience spanning multiple sectors, from venture capital to LSE-listed Sistema's India unit to CFO of Guggenheim Partners-owned company, DLI. He is a mentor and judge at Entrepreneurship cells in Mumbai, Delhi, Chennai, and Dhanbad, which I'm sure I've misspelt and mispronunciated. Tusha has expertise in financial and business advisory, fundraising, creation of docs, collaterals for venture capital funding. Tusha is a venture capital advisor with a loyal venture capital funds and has investment portfolios in over 160 investments in more than 35 countries across the world. He is a partner with GSD Venture Studios, a Silicon Valley-based venture builder, and over the years, Tusha has arranged funding for startups and growth stage companies in diverse sectors such as edtech, fintech, consumer B2C, B2B startups, D2C, agri-tech, disruptive and deep tech, as well as non-tech sectors. His expert opinion has been sought from leading business news channels and publications including CNN, VCTV, Business World, Business and Economy, and Digital Market Asia. He's come with over 100 talks to his portfolio, and he's received executive education from Harvard Business School, an MBA in finance from the University of Delhi, and BTech from the Technology Institute of Textile and Sciences. And I wanted to start the show today with Tusha's favorite quote, and it says, "It's our choices that show what we really are, far more than our abilities." Hello, Tushna. I'm so excited to have you on the show today and get to share your expertise and knowledge with the audience. How are you?
I'm great, Toni. Thank you so much for having me on the show. I've been following your show since a long time, and it's full of energy and vibe. And, there is so much of connect you have with the various kind of people, who come from all walks of life, and the way you connect, I was really looking forward to being on your show and discussing some very interesting things about venture capital and about each other. Thank you so much, Toni.
Oh, Tusha, I was excited too because for me, I've got no level of knowledge from which to build or understanding from around venture capital. I don't come from a finance background, so it's a real privilege to get to talk to someone of your knowledge. And I thought we'd start the show talking about the current global economic scenario. And in your first question, you wanted to talk about why liquidity is so high and why it's fueling or bursting bubbles across all asset classes. So I thought I'd start and tell me what the term liquidity means in terms of economics across the world.
Thank you, Toni. So liquidity means the availability of money, and it's a top-down kind of thing, that how much money is available with the government. Then further on, how much money it lends to different entities, and then these entities get the money. So what do they do with the money? Either they do a business, or they would invest that money. So what is happening is, the governments are printing a lot of money since 2008 and 2009, and
Ah.
$25 trillion of cash has been printed by different governments since 2008 and 9. All this money is going as a debt into various financial companies, and these companies are pushing this money into speculative assets like stock markets, commodities, forex, like cryptocurrency, and there is a bubble in real estate, in all the asset classes across the
Yes.
world.
Right. So, the concept of governments printing money sounds a little scary to me, but is it really scary? Is it a good thing? Should they be printing money? Or is it just the way of economic finance as we exist at this moment in time?
Tony, so if something is more in supply, the value of that thing goes down over time. So the more cash is there in the system, the value of that cash lowers down, and that is called inflation. So what we are seeing is that the
Ah,
amount of money which has been printed, it is causing a lot of inflation. And if you are an old person, you are a retired person, you are having your savings, and then you realize that the interest rate which you are getting on your savings is lesser than inflation. So you are living in a negative return environment. So that is the
oh, wow.
cause of concern.
Yeah, that is a cause of concern. So, Tusha, how does venture capital how has it come into prominence as an investing asset class of its own?
So, it is in comparison to other investment options like stock markets, real estate, commodities, forex, cryptocurrency. And, over a period of time, there have been some research which says that venture capital as an asset class is the riskiest kind of investment. But at the same time, the returns it generates over a 10-year period are 54% annual return. So, the,
Wow.
yeah, so the returns generated by venture capital exceed the returns generated by all the other asset classes, and hence it is in prominence, and people love to do investment via venture capital.
So, Tusha, it's even better than cryptocurrency because we hear a lot about cryptocurrency at the moment, but you're suggesting that venture capital is a better way to go?
So, everything where we invest has some inherent value. So, if you are betting on gold, you have a physical gold which has a value. People like to use it for jewelry. If you are betting on real
Yes.
estate, you have land, you have a building. If you are betting on stock markets, these are companies which are existing and running and doing a business. But when you are
Yes.
betting on cryptocurrency, it does not have any value. It is just a number on the screen. So
Yeah.
because it can't be used anywhere. So basically, as a asset class, venture capital is much more superior to cryptocurrency, because when you are investing venture capital, you are actually putting in money in companies which are going to create something new and disrupt the market. So
Yes.
so it is
Yes.
much superior to cryptocurrency. Cryptocurrency is pure speculation, in my view.
Good to know. Tusha, you work in certain sectors. Why do you work there? And what's it mean to you? What's your favorite sector to work in and why?
I work in the broad realm of venture capital, but as a investor in venture capital, we put our money into various sectors. So these sectors are education technology, financial technology, agri technology, and consumer B2B and B2C. So, we are always looking for exciting technology where we can put in, guide investments into, and then that company can grow and, compete with the established players in the market and create a niche for
Yeah.
itself and thereby generate a return for us.
Yeah. Tusha, just to confirm that venture capital are funds that are lent, I guess you could say, to a business versus a bank loan. Yeah?
Uh, they are not lent as
Or is
in
that bit
uh,
simply? That's a bit of a simplistic explanation, isn't it?
the simplistic explanation is that, if you take your money from a bank, then it is a
Mm-hmm.
loan, it is a debt which you have to
Yes.
return back. But when you are taking money from venture capital, you are parting away with a share of your company, like 10% or 15% or 20%. Now, when the business will grow, the value of those shares will increase. And in the future, the investor will sell that shareholding to a third investor and make his return and exit from your
Ah.
business.
Okay. So that really is a much uh, easier way for a company to have funds to grow and scale, yeah?
Yeah, it is easy and good because it is a very patient kind of capital. You won't be asked
Yes.
to the
Pay it.
investor will stay for 3 years, 5 years, 8 years, and all this time he will be helping you because he wants his value to grow, the value of his shareholding, and
Ah.
it comes with certain riders, like there are some rights which the
Yes.
investor has, and those are encapsulated in the form of a term sheet. So the investor issues a term sheet,
Yes.
and it is good because, if there are two companies, one company is working without venture capital, one company is working with venture capital. So the company with
Yes.
venture capital, I'll give you an example. There is a company called
Yes.
Licious, and Licious took 100 million dollars of venture capital, and it
Yes.
reached a turnover of uh, how to say how much, $15 million within 3 to 4 years.
Wow.
And as compared to the other companies who were present in the space since 15-20 years and then were able to reach $15 million of turnover. So that money helps you tide over your competition
Yes.
and grow real fast.
Yes. Yes. That's really amazing. Tushna, there's some trends happening across the world at the moment. Can you explain why people might be missing or not paying attention to those trends?
I'm not sure what you mean, which kind of trends you're talking about, but
Oh, sorry. What trends are happening across the world at the moment that people might not be
uh,
thinking about? What are some of the
so
trends?
so you should be very watchful of the fact that with the inflation raising its head across countries, the central bankers
Mm-hmm.
of the world, like Federal Reserve in the US and the European Bank, they are very
Yes.
mindful of uh, curbing this flow of money, and
Okay.
there are some black swan events, which, as Nassim Taleb said, which, like, a Chinese company, a real estate company called
Yes. Yes.
Evergrande. It
Yes.
has $300 billion of debt, and it is unable to pay its debt. So naturally, when one entity which is too big to fail, when it affects the whole system, then other entities also get affected. So it
Yeah.
becomes a systemic issue, and So we should be very watchful of the entities in China which are not paying back their debt, and the slowdown in real estate growth in China,
Ah,
and also the US Federal Reserve as to if it will do a taper tantrum, and it will
yes.
stop printing that kind of money which it has been printing.
Yeah. So when a company in China of that size goes down, and do you think that the Chinese government, are they likely to bail out this company, or will it just fold, Trisha?
Tony, you can bail out one company, but then, there would be other companies who would start feeling that they can load on as much of debt as possible, because end of the day, the government will
Ah,
bail them out. So it affects the discipline of the lending and borrowing process.
yes.
So I don't
So
see the Chinese government right now in a mood to
then,
bail out Evergrande.
okay, okay. And that will have worldwide implications, I understand.
Definitely, because the debt to GDP ratio in China is more than 350%. So, on a $15 trillion economy, the Chinese government has more than $50 trillion of debt on itself. So, if the entities
Wow.
which are using that debt, they are unable to pay back their debt, then the whole GDP growth will get affected. And the world GDP growth
Wow.
is primarily coming from India and China. So naturally, if China gets
Ah.
affected, the global growth gets affected.
So if China gets affected, that affects the world. How's India traveling?
India got a 10% GDP cut because of COVID, but the way it has bounced back is phenomenal. I mean, we are already back to the same size of economy as we were prior to COVID, and 75% of the 1.4 billion people have been vaccinated with one dose, and 25% of 1.4 billion people have been vaccinated with double dose. So the COVID situation is very much under control. The sectors have bounced back, and we are seeing a huge growth. Our exports have grown from $300 billion to $400 billion within a matter of 5 months. And so
Trisha,
India is doing really well.
that must be very exciting
It is very
for India.
exciting. Definitely,
Yeah.
it is a sunshine moment for India, and
Yes.
the economy is doing really well.
That's fantastic. Um, Going back to venture capital, what sorts of founder characteristics do the venture funds look for?
Uh, See, ideal situation is that the venture capital would want to put his money on a founder who has already run a successful company and exited from that company. So one who has already
Ah,
done it. Those who have already done it,
okay.
when they start again, they get huge amount of seed capital, $15 million, $40 million. And there is a company called 10 Club, which is run by three
Yes.
successful founders, and they have received $40 million in seed capital for their new business. So
Wow.
the second thing is that the founder should really know his sector very well, that what is he creating. The third thing
Yes.
is the founder should have made a team which is very balanced. It has people from
Yes.
finance, from technology, from product, from marketing. So, a balanced team is very important. And, so the founder uh, should uh, uh, should be someone who should really understand the product which he's creating. If it is a technology
Yes.
company, the founder better be from technology.
Ah, Okay, that's really that's good to know. Those I hadn't thought of it in terms of that. I just thought that you had a company, you decided that you needed capital, and you went out to the venture funds to look for that capital. I didn't realize that there were particular characteristics. That's very interesting. Um, what are the differentiating factors that you look for in a company to add to your investors' portfolio? So my understanding is that you have like a whole group of investors and they're always on the lookout to invest their funds with a particular company. What are the different things that you look for?
So, when we are looking for, I'll say the biggest factor for me is that what is the problem that company is solving? The problem confronting humanity. So, there is a environmental issue with the raising of global temperatures, and
Yes,
there is a issue with mobility, like new electric vehicles, and then
yes,
any kind of the problem which the company is
yes,
solving should be a good problem. And then
yes,
the company, the team, I really look at the team. And
yes.
then what is the business model, how will the company make money from the product or service it is proposing. And then the 5-year projections as to how will the business pan out over a period of 5 years. And apart from that, if there is technology, then we need to check whether there is intellectual property behind that technology or not.
Yes.
So all these factors, Toni.
Yeah. So it's a little bit more complex than I first thought. So there companies need to actually have been trading for a certain amount of time. Tusha, does this mean that I'm just thinking of some certain scenarios. So if you're in the first 12 months of your company's business, then it may not actually be achievable to get venture capital funding versus someone who might have been in business for 5 to 10 years, who has a proven track record and then wants to scale and expand or release a new technology. They're more likely to attract investors with venture capital.
Toni, see, the thing is that uh, that if you start, then at the start you should take some money from friends and family, and
Ah, okay.
not take the money from any investor, because the valuation which
Yes.
of the business which you will get is very low.
Ah,
But
okay.
so once your product is created, it is starting to generate some revenue. That is the time when the best time to take venture capital. But having said that,
Okay.
there are many platforms which are available, huge number of platforms like Y Combinator, and many platforms which give you 300,000 to $500,000 at the start of your business.
Ah, I didn't realize that either. So on top of friends and family, and I'm just wondering if you get borrow money from friends and family, should you have in place the same sorts of agreements that you would say if you had a venture capital funding you? Should you have the same sorts of agreements in place?
I don't think so that you will have
Yeah.
a 20-page agreement, which generally you sign with the venture capital guys. When it comes to friends and
Yes.
family, you can have a simpler one.
But you still should have some sort of agreement, shouldn't you?
Definitely, you should have some agreement. And also,
Hmm.
sometimes what happens is these founders are very young guys. They are very full of, young blood. So what happens is they
Yes.
come together. Okay, I'm having 60%, you have 40%. Let us open a company. They forget to sign an agreement between the two of them.
Yes.
So the
It,
founders
it,
agreement is very important, because later on when the company
yes.
grows up, they start fighting because there is nothing between them.
Yeah, yeah. And Tusha, that agreement should state if they get shares in the company, or if they want to exit, they get their capital back plus a certain percentage. Is that the sort of fundamentals that should go into an agreement?
There are many points which get covered
Yes.
into an agreement, but primarily
Mm.
it is not about the return, because they are the two founders, co-founders are signing it amongst themselves. If they are signing the agreement with
Yes.
an investor, then they need to
Yes, it's
have,
different.
yeah, it need to have exit clauses, it needs to have rights and
Ah,
responsibilities. But when two
yes.
co-founders are signing amongst themselves, then they should clearly define their roles and responsibilities, and also the percentage of shareholding and how much money will each of them bring into the business.
Yeah, yeah, that's amazing. Tusha, you've had so much experience in this area of expertise. Obviously, you've been very successful. How do you spot the right investments?
Uh, See, Tony, I go by three thumb rules. The first thumb rule
Yes,
is that what is the problem the startup is solving? For me,
yes,
that is the biggest thing. And what is the
yes,
market size of that business? And secondly, the team. What is the team? And
yes.
third thing is, if it is technology, I would like to see intellectual property behind that technology.
Okay, and when you talk about intellectual property, that's around trademarking and where they hold their intellectual property. Is that my correct understanding?
So, when you file intellectual property, then a lot of countries have a common platform. So it is
Yes.
not difficult to file your intellectual property across countries. So
Ah,
the best way is, see, there are governments which want to support innovation. So what they do is
yes.
they take the intellectual property as a collateral, and they lend you money
Ah,
against that. So,
right.
in terms of lending money against intellectual property, Singapore is the number one destination in the world.
Oh, really?
So, I advise my companies to file their intellectual property in Singapore.
In Singapore.
Right.
Oh, that's good to know. And
Yeah.
so if they file it in Singapore, then and it's protected in Singapore, I assume?
Yeah, it gets protected in Singapore, but at the same time, you can file it in such a way that your intellectual property gets protected across more than 100 countries.
Wow. And that should be enough, shouldn't it?
That should be enough, because it covers all the European countries, it covers the US,
Yeah.
it covers
Yeah.
Southeast Asia and Australia, it covers Japan
Yes.
and China, it covers
Yeah.
Taiwan and South Korea. So it covers India also, and Dubai, United
Yeah.
Arab Emirates, UAE.
Yes.
So
Yes.
that should be more than enough.
Okay. Now, I know also that you've worked with lots and lots of companies. Um, what's your favorite? What's the one that you're most proud of that you invested in, and why?
I put my money into a robotic company called Animoy Technologies, and
Oh,
so
wow.
see, basically, you have to see when the municipal corporations, when they clean the sewage lines, then many times they
Yes.
use human beings.
Yes.
So it is called manual scavenging. So this robotic
Wow.
company has come out with robos which will do the scavenging. So it will be a robotic scavenging.
Oh, wow.
So that's why I put a little bit of money into that, because I felt that in today's times, we are living in such times, and still we are using humans for manual scavenging. Uh, I,
Mm,
I
yeah,
thought it is a very wrong thing to do.
yeah. Tusha, when you're thinking about investing, is it the innovative tech ideas in combination with something that relieves human manual labor, is socially conscious or good for the planet? Are those the sort of things that get you excited? Something that combines that technology innovation with protecting humanity or the planet? Are those the things that light you up when you see them?
So, Tony, this is a phenomena which is taken shape across the world,
Yes.
starting from the countries like India, China, US, Europe, and it is called
Mm.
ESG, environmental, social,
Yes.
and corporate governance. So
Yep.
a lot of the money which is available in the US gets invested into companies which follow ESG norms, environmental, social, and corporate
Ah,
governance norms. And that
yes.
money is huge. It runs into billions of dollars. And environment, that the global temperatures are rising, so we need to
Yes.
the Paris Accord is there.
Yes.
Then
Yes.
on social, the percentage of women in the board of directors is right now 14%, which is nothing.
I know. I
it,
know. What's with that?
it has to grow to at least 50%. And
Absolutely.
right. And and also the companies, they need to have proper compliances, so that gets covered into corporate governance.
Yeah, yeah. I've spent a lot of time over the last year talking to uh, businesses that work in the area of corporate governance, and they have been fascinating conversations. I didn't realize that there's many companies that don't take corporate governance seriously, and they don't do it well. So I've learnt a lot about corporate governance just from those conversations. Um, that's got to be an important component when you're looking at investing your money, is that they have their corporate compliance right.
Absolutely, Tony. See, the thing is that uh, that how to say? Okay, so there is an oil company which is a big oil
Mm,
company listed in the US, and
yes.
it is operating across countries in Asia, in Africa. So although they are coming from a very legally compliant country like US and Europe,
Yes.
but still they will cut corners when they are operating in certain other countries.
Oh, really?
So the shareholders, when they catch hold of these kind of activities, they push the
Mm-hmm.
company towards becoming more compliant.
Good, as they should. That's a
Right.
good thing for it to happen. Tusha, in this next question is about sales, and I'm curious to see what you've seen change over the last decade and how the world of sales is evolving across the world at the moment.
There was a research which was conducted across countries, especially India and China, with young populations, and they did a research on what customers want to see when they are in a mall or a retail outlet. and
Yes,
uh, and
yes,
more than 50% of the people who participated in the research, they said they
uh
would
huh,
like to see more of AR and VR, augmented reality and virtual reality, into the
yes,
showrooms. So
yeah,
we are moving towards a time where uh, where the whole experience of shopping matters a lot. And amongst
Absolutely.
one new trend is live shopping. So you are on a website and you want to buy
Yes.
something through an e-commerce,
Yes.
and you are seeing a live video of that product.
Yeah, yeah, that's amazing.
So that is a new trend
So,
which is coming up.
so that will change the way that people shop and how they feel about shopping. And if you can have that same shopping center experience in your own home from your TV or computer, that's a huge shift from what we've seen, isn't it?
Absolutely. And once these big companies like Google, Facebook, Netflix, Amazon, and these companies, they have huge amount of data on their consumers.
Yeah,
And
yeah.
you will be surprised to know that Google has mapped 7 billion out of the 8 billion global population. Each person they have mapped on 700 parameters. So they know
Wow.
where, what you eat, where
What?
you travel, who comes to visit you,
Yes.
they know everything.
Scary, isn't it?
Yeah, it is quite scary. They are able
Yeah.
to use this data to show you the products and services, to sell products and services to you.
Yeah. So it's tailored for your specific, what you're looking for, your personality, your age, your habits. That's
Absolutely.
quite amazing. That actually, you often you'll be thinking of something, oh, I need X or Y, and you'll start searching for it on Google because that's just what we do now. And suddenly those sorts of things start popping up. That's why, isn't it? Because Google's been
Yeah,
watching everything you do and they're going to feed you all
absolutely.
the things that you want to hear about. Ah.
And
Tusha,
it goes even deeper,
yeah,
Tony. Sorry to interrupt you.
yes,
Like
you're
if you are
right.
talking to somebody about vacuum cleaner, so the moment you will go on
Yes.
any website, you will see a advertisement of vacuum cleaner.
Oh my goodness. That's why Google's so big, isn't it?
Yeah, absolutely. $2 trillion value of the company.
Gosh, and that's probably only going to grow, isn't it? That's a bit sad. But when we're talking about growth, Tusha, what do you think founders should focus on in terms of growth and revenue?
Tony, when it comes to growth, there are two, three ways in which a company can grow. One is it can become vertically integrated company, or it can become a horizontally
Yes.
integrated company. So when it becomes vertically integrated, so whatever it is selling, it tries to
Yes.
uh, get into other products and services which are complementary to the main business.
Yes.
and
Yes.
and horizontally means that whatever it is selling, it tries to get into the product which is prior to the product it is selling. So if it is selling
Ah.
yeah, if it is selling textile, then the
Mm-hmm.
synthetic textile comes from
Yes.
byproduct of oil, so it will start getting into oil.
Yes. Ah.
So
Okay.
yeah. And the growth
In
also
thinking,
comes from going across borders to new markets.
yes, I was just going to say that the capacity is never more evident as it is now, or showed us through COVID, that there should be no barrier to cross country sales and around the world businesses, because we've been shown that that's possible, isn't it? So we should be able to trade across the world, across borders, across countries without
Absolutely.
fear or favor. Yep.
Right.
Um, Tusha, when we're talking about founders and their attitudes, and I love this question. This next question is about abundance and frugality when it comes to their investment funding. What sort of attitudes around abundance and frugality are important for founders to remember?
Your question is very relevant, Toni. We are living in times when a lot of companies, they just purely burn investors' cash and they forget to be frugal. So,
Yes.
I'll give you an example of WeWork. You
Yes,
know,
please.
WeWork takes the best location in the city, which is the costliest location. It
Yeah.
builds seven-star infrastructure, which is the costliest infrastructure. And it
Yeah.
takes those properties on 15-year lease. So it has commitments on lease for 15 years. And
Yes.
then what is the end customer? The end customer is somebody who's part of the gig economy and who does not have a regular job in most cases.
Mm, mm.
So on the one hand, your product is a 7 star. On the other hand, your targeted customer is someone who can barely pay for your product. So,
Right.
so where is frugality? Where is innovation? So,
Yeah.
it's, many times you have access to investors' cash. So you start getting into vanity projects. So, I would say that this business model is a vanity business model.
Yeah. Okay.
And
So that's
innovation sometimes comes from lack of money. When you have less money available,
yeah.
you
Yes.
start to innovate.
Yes. Yes. Absolutely.
There
Absolutely.
is
It's like,
a
oh, I want to do this. How do I do this? Okay, let's try it this way. Yeah, yeah.
there is a
That's a good
term
thing
in
though.
India. Yeah, there is a term in
Yes.
India for that. We call it jugaad.
Oh, that's a
Yeah,
nice word.
it means frugal innovation.
Yeah, yeah. Which is good. It's good for the planet. It's good for humans. It's good for our creative minds to think up things that and different ways of doing things, different ways of thinking about things. That's a really good attitude for founders to have. If What would you say to a founder evaluating the potential investment partners? What characteristics should a founder look for in their investment partners?
Uh, Tony, a lot of time these college students, when they come together, they they are very excited. They get together to do something, but the commitment level of two people is not the same.
Yeah,
So
yeah.
there is one person who really believes in the business and who keeps on pushing at the business. The other person might feel that, okay, no, after college, I will join a job.
Mm.
So I would feel the vision and the what to say, the belief in the company which they are
Yes.
creating. It should be the same with both the co-founders.
So their vision and their mission and their values should be absolutely aligned because if
Aligned,
you
yeah, because it's a
yeah,
long-term
yeah.
commitment.
So yeah, 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 yeah. So you're not going to put an oil company or a petroleum led company with a environmental change agent or funds from either or. They're not. They're just because they're not going to work, are they?
It's not going to work. And when these kind of partnerships break later on, they cause a lot of harm to the company. So
Yeah,
that's why I
yeah.
say that all the co-founders, they should have agreements between themselves defining their
Yes.
rights and responsibilities.
Yeah, yeah. Tusha, are you finding more and more companies working in the realm of that whole social conscious what's good for the earth, what's good for humanity, what's good for the planet. Are you finding more and more companies that are operating in those areas and needing venture capital funds to scale or grow?
Uh, so, a lot of these people who became super rich on the back of the valuations of their companies, they have opened foundations and they have. So, the wife of Jeff Bezos, she in
Yes.
her, she has recently donated billions of dollars. And Bill and
Mm.
Melinda Gates Foundation, they have been distributing a huge amount of donations. They have been making.
Vaccines. Yeah.
Yeah, but
Yes.
it is not enough. It is not enough.
Yeah.
There has to be more
More.
give back to the community from people
Yes.
who have more than what they need.
Absolutely. I'm absolutely with you. I think that the more there's a lot of abundance across the world, and if it was, there's only so much money that you can spend in a day, and the rest you don't need. So at the very base level, you need a roof over your head, you need to feel safe, and you need food in your belly. If you cover off those three things, then the rest of it is just gloss over the top, and that money could be used to end world hunger, stop childhood trafficking, invest in cancer research. There's just so many amazing things that we could put our money into, rather than the spending it just because you have it. And I guess that's where your consultancy comes in, isn't it, Tusha? You help to connect investors with companies and put them together in a way that's going to be successful. And you've been doing it for a very long time and very successfully. Tusha, we're just heading towards the end of the program. My one question I haven't asked yet is, I want to know the company that you connected with a venture capitalist that you saw really grow, and which really excited you and which made you feel enormously proud of the work that you do.
Uh, there are many companies like that which are growing and have grown. But
Yes.
I would still say that Plantus Innovations is one company.
Yes.
The founder has worked in 5 continents. He was director of PepsiCo Europe, and
Oh, wow.
he has no children, so he and his wife, they want to give back to the society. So they realize that a lot of the so-called organic beauty products, organic men's grooming products, organic baby care
Yeah.
products, they are actually not organic. So
Yes.
they yeah, I mean, so his wife, she has done a course from Christian Dior Institute in Europe.
Mm-hmm.
So
Yes.
they created formulations which are compliant to the highest organic standard in the world, which is EcoCert Cosmos V3. And
Wow.
they have brought these formulations at very attractive prices. And so apart from the fact that they are giving back to the society, but
Yes.
end of the day, they are also they have created a sound business model around those products. So I really admire that
Yeah.
kind of thinking. And they
Yes.
have generated funds from the investors through us also.
Ah, that's amazing, Trisha. That's really amazing. Um, I think that
Thank you.
I've learnt so much today about how this all works, and from a perspective of someone who hasn't ever been involved in that level of finance, you've made it sound so much easier to understand. I'm
No,
sure that
Toni,
in the
it
background,
is your questions and your focus and the way you ask such amazing and well-informed questions that it just made my task so much easier. Thank you so much, Toni.
Oh, Tusha, I think that for the average everyday person, they need to understand just some of these baselines about how the world economy works, and that there is a lot of money out there for you to go and chase your dream and create something, a company, an innovation. There's abundant amounts of money, and it's just about who you talk to about that idea. And that's the purpose of your company, isn't it, Trisha? You connect those conversations and those innovations and those companies with people who can help them with their funding so that they can grow and scale, and we will end up with a much better world and planet. So people don't necessarily have to go and think, oh, I just have to go and get a job. No, you actually might be able to go and create a company and do X, Y, Z. So that simple idea about the robotics that replaces the human work in cleaning out sewage pipes, such a simple concept, but it's a game changer. It's a world changer. And there's plenty of those ideas out there, isn't there, Tusha?
There are plenty of ideas. People are so much aware about venture capital nowadays that people from small towns, from tier
Yes.
2 and tier 3 towns,
Yes.
I get a call from a town in a very small state, small in terms of it's a very poor state, and they have
Yes.
floods going on, and in between the
Yes.
floods this guy is asking me about funding. So it is,
Oh,
the the phenomena has
Trisha,
really caught on. And I'll give you an example.
and I was,
2 years back,
yes,
2 years back, there were 28,000 startups registered with Startup India, which is the government body. And
yes.
within a matter of 2 years, it has increased from 28,000 to 50,000.
Oh, amazing.
Yeah,
Amazing.
so that is the awareness.
That's the awareness. Tusha, we are completely out of time. I just
Sure.
want the audience to know that we have your contact details in the chat. We will also connect them to everywhere that you watch this video. And Tusha is always happy to chat to anyone about venture capital. He has immense experience and a phenomenal portfolio of investors and venture capitalists. And so if you've got the spark of an idea, please talk to Tusha. Tusha Kansel, thank you so much for coming on Radio Toni Everyday Business. It's a divine pleasure, and I absolutely know that we'll have to get you back on the show again to have further chats about how this all works, because you've just sparked an interest in me that I think I want to follow. Wonderful audience. That's our lot for this week. Tusha Kansel, thank you very much for joining us on the show today, and we will be back next week with another show. This is bye for now, and see you next week.
Thank you so much, Toni. Thank you. And all the team behind you. Thank you so much.
Thank you.